Okay, so now we are going to do the illustration number 1. So if you see this question, the question is same as the question which is there in your study mat. Okay, so there might be some changes in the names and all, but amount and values are the same only. Okay, so this is the question. Take your study mat and go through the question first. So this is a simple question asking us to prepare journal entries and ledger accounts. Okay, so now let's see what is the question is. So in April 1st, Mr. Vigas and Mrs. Vaibhavi, who are husband and wife, started offering consultancy services by investing cash of rupees 5 lakh and 2 lakh 50,000 respectively. So Mr. Vigas and Mrs. Vaibhavi is starting a business, commencing a business, and they are bringing in cash of rupees 5 lakh and 2 lakh 50,000. So this is what we call as what? Capital, right? So both of them are bringing cash as their capital. Okay, so now let's see what it is given here. From business point of view, the two effects of this transaction are: first, the cash of rupees 7,50,000 has come into business, and second, there is an obligation of the business towards Mr. Vigas and Mrs. Vaibhavi, right? 7,50,000 in the sense 5 lakh plus 2,50,000 together. Okay, so there are two transactions that came here. First one is the cash that came in, that is rupees 7,50,000, and the capital. That means capital in the sense the business has now the obligation to return back whatever amount it received from its owners, right? So that obligation is what we call as what? Capital. So we have that obligation. So these are the two transactions that happened here. Now we know that cash is real account. So rule for real account will apply. Cash has come into the business, thereby increasing the asset. Hence cash account should be debited. We also know that Vigas's account and Vaibhavi's account are personal accounts. So rule for personal account will apply. As both Vigas and Vaibhavi are givers of cash, their respective accounts will be credited. So this is in the way they have explained this first transaction with the on the basis of golden approach. As I told you, there are two approaches we can take. Those people who are following golden approach, these explanations are for them. Okay, so the other approach, there was two approaches, right? We can also say it in other words, like cash is being bought into the business. So cash is an asset. So asset is increasing. So when asset is increasing, what we have to do? We have to debit cash, right? Then capital is also increasing, right? Vikas and Vaibhavi is bringing in capital, bringing in cash as their capital. So capital, when capital is increasing, we have to credit it, right? So the simple entry will be what? So I have just prepared a table here. There won't be tables from now on. It's just that since this is our very first illustration of financial accounting, I just thought to do it. So date, particulars, ledger folio, voucher number. It's not necessary actually. Debit and credit. Okay. So date, it was April 1st, right? So usually we can write April 1st or whatever it is. 1st of April. I'm not sure about the year. So okay, first transaction was what? Vaibhavi and Vikas is bringing in cash as a capital. So cash is an asset. So cash account debit to Vikas's account to Vaibhavi's capital account. Okay, so what is the amount? He is bringing in 7,50,000 together. How? Vikas is bringing in rupees 5 lakh and Vaibhavi is bringing in 2,50,000. We have to also write narration. Okay. Bought in cash. Bought in capital. Okay. Fine. So this is the first transaction that comes. What is the second transaction? In April 10, what happens? They buy office furniture of rupees 25,000 for cash. Okay, so they are buying office furniture and it is bought for cash only. And here, what business are they beginning? They are offering consultancy services as per my study mat, as per my book. I'm not sure what it is there in our study mat. Okay, so whatever it is not related to any asset. It is some kind of service only they are offering, right? So he is not dealing with furniture. He is buying this furniture for the office only for the amount 25,000. So what happens? Cash decreases, right? Cash decreases 25,000 from the business. And what happens? Our furniture is a kind of asset. So furniture is also an asset. Cash is also an asset. So cash increases. Asset increases and asset decreases. So furniture account debit to cash account. Since cash has been decreasing, cash is an asset, so when it is decreasing, we have to credit it. Okay, simple as that. So here, see, the two effects are: first, furniture, which is an asset, has come into the business, and second, cash, which is also an asset, has gone out of business. Since both the accounts, that is furniture and cash, are real accounts, rule for real account will apply. Furniture has come in, asset is increased, it will be debited, and cash has gone out, as it is decreased, it will be credited. Okay, so what will be our journal entry? So April 10. So April 10, from now onwards, I will be writing this date, these in this format. So furniture is an asset. So furniture account debit. It is an asset, right? That's why a furniture asset increased. So I debited it to cash. Cash is also an asset. It decreased. Okay, so how much? 25,000. 25,000. Okay, here bought furniture for cash. Okay, so now let's see the next transaction. They open a current account with Citibank by depositing rupees 1 lakh. So the name of the bank is different, which is there in our study mat. Okay, so they opened a current account with Citibank by depositing rupees 1 lakh. The amount is same only. What happens here? First, cash in hand has gone out, right? They are depositing 1 lakh. That means cash of the business is decreasing, since they are taking amount from the business and then only they are depositing into the bank, right? So cash in hand is decreasing, asset decreased, and also second, the business cash at bank has increased. Cash at bank increased, right? We took the amount which is there in our pocket, 1 lakh. So cash in our hand decreased, asset decreased. And what did they do? They deposited it in the bank. So cash at bank increased, asset increased. So see here, cash is a real account and bank is a personal account. So what will be our journal entry? It happened in April 11. April 11. What will be our, I think, I'm not sure if was it Bank of Baroda in our study mat. Whatever bank it is, just write the name of the bank. Okay, here in my book it is written as Citibank only. So Citibank, bank increased, right? It is an asset, so I debited it. 2, cash in my hand decreased, right? Or in the business's hand decreased. So what is the amount I deposited? That is 1 lakh. Okay, so we can write deposited rupees 1 lakh in Citibank. Okay, so you have written the narration. Let's go to the next transaction. Next transaction tells us that in April 15, what happens? They pay office rent of rupees 15,000 for the month by check drawn in their Citibank to Mrs. Realtors Properties. Okay, I don't think there is these names in our study mat. I'm not sure. I read it once. Doesn't matter, the amount is same only. So they are paying what? Office rent for the month by check drawn. So what are the two effects here? First, since the payment is made by check, payment is made by check only. So what happens? Bank balance decrease, right? Bank balance will reduce, asset is decreasing. And second, rent being an item of expense, rent expense will increase, right? Expense, when expense is increasing, what we have to do? We have to debit it. So rent have to be debited, right? Here, in golden approach way, Citibank account being a personal account, rule for personal account will apply. Citibank account will be credited. Rent account being a nominal account, rule for nominal account will apply. Since rent is paid, it is an expense. Hence, rent account will be debited. So, how will our journal entry appear? See here, on April 15, what happened? April 15, what happened? Rent account. Debit. Rent is an expense. So, when it is increased, we have to debit it. 2. We are paying with the check only. So bank balance decrease. This was an asset. When asset decreases, we have to credit it. Right. What is the amount? 15,000. Okay. What is our next transaction? They buy a motor car worth rupees 4,50,000 from Millennium Motors by making a down payment of rupees 15,000 by check drawn on Citibank and the balance by taking a loan from HDFC Bank. So what happens? This business, Vaibhavi and Vikas, through their business, the business is buying a motor car. Okay, so it is worth of rupees 4,50,000. They are buying it from Millennium Motors. 50,000 rupees they are paying as by check. down payment. Okay, then the balance amount they are paying by taking a loan from HDFC Bank. So let's see the effects here. First, motor car, which is an asset, has come into the business. Increase in asset, right? What happens? Motor car is an asset, so it is bought into the business, so that means asset is increasing. Okay, so it has to be debited. Fine. Second, bank balance, which is an asset, has reduced because 50,000 is being paid by check only, so bank balance reduces, so it is also an asset, so asset increases, so we have to credit it. Thirdly, there is an obligation created towards HDFC Bank from whom loan of rupees 4 lakh is taken. Since 50,000, 4 lakh 50,000 is the total worth of this motor car, and 50,000 is being paid as down payment. The rest, the balance 4 lakh, we are paying by taking a loan from this particular HDFC Bank, right? So we are created. So there is an obligation created here. We have to pay HDFC Bank. Yeah. So what happens? Liability increases. Loan is a liability, so liability increases, we have to credit it. So see, in golden approach way, see here, Citibank is a personal account, so rule for personal account will apply. Citibank will be credited. Motor car is a real account, so rule for real account will apply. Motor car has come in, so motor car account will be debited. Okay, then what? HDFC Bank is a provider of loan to whom money is payable by the business in the future. So the business have to pay HDFC in the future. 4 lakh rupees you have to pay to the HDFC Bank. HDFC Bank account being a personal account, rule for personal account will apply. HDFC Bank being the giver, it will be credited. Okay, so in the bracket they have given us something. See, in different opinions we can consider Citibank account as real account. The reason behind that is the balance at Citibank account belongs to the business, so it is an asset. However, in any circumstances, HDFC Bank has paid Millennium Motors on behalf of the business cannot be considered as real account. It is a personal account as it does not hold any business cash. So see here, in this question we dealt with two bank. First one was Citibank. We considered Citibank to be a real account. Why? Because Citibank had the amount of the business. It is holding the money of the business. But in case of HDFC, we have taken loan only. The HDFC Bank doesn't have any money of the business. There is no deposit of this particular business in the HDFC Bank. So thus, here, HDFC Bank is being treated as a personal account. So that is what you have written in the bracket. So it is a personal account as it does not hold any business cash. That's it. So you have to note that point. So we are going to write the journal entry. See, this happens at April 20. So at April 20, motor car, right? Motor car, or you can say it is an asset. So motor car, it is an asset. So it is increasing. So we have to debit it. Account, debit 2. I am paying by what? By bank. Citibank has my cash. It is holding my amount, my cash, right? So bank balance decreases. So motor car, I'm buying it for how much? Total 4,50,000, right? So cash at bank it is an asset, so it is decreasing. So 50,000 balance from my bank is decreasing. And what happens? Loan from HDFC Bank account. Okay, HDFC Bank. So how much? 4 lakh. So what happened here? You have to write that entire point as our narration now. Just written in a very concise format. Okay, so next transaction. Okay, in April 25, what happens? Because in YVB, we carried out a consulting assignment for Avon Pharmaceuticals. Name will be different in our study mat. Okay, so consulting assignment for Avon Pharmaceuticals and raise a bill for rupees 10 lakh, right? 10 lakh as consultancy fees. So they are carrying out a consulting assignment and they are raising a bill for rupees 10 lakh as consultancy fees. Avon Pharmaceuticals are immediately settled rupees 2,50,000 by way of check and balance will be paid after 30 days. So here in this, Mr. Vikas and Vaibhavi, what is happening? They are actually making revenue for the business, right? Let's read the entire question completely. So what happens? Avon Pharmaceuticals have immediately settled rupees 2,50,000 by way of check. Okay. Avon Pharmaceuticals have given the business rupees 2,50,000 by way of check, and the balance amount they said they will be paying it after 30 days. So I think this Aven Pharmaceuticals like a creditor. Sorry, it's like a debtor. It's like a debtor to the business, right? Then what happens? The check receipt is deposited into Citibank. Okay. So here, let's discuss the effect. First, the work done by Vikas and Vaibhavi has resulted in the revenue for the business. What should be the amount of revenue considered? Is it rupees 10 lakh for which work is done, or only rupees 2,50,000 which is received? The revenue of entire rupees 10 lakh will be considered, as by doing the work, the business has acquired legal claim against Avon Pharmaceutical. Second effect will be cash, that is received by way of check, right? So our bank balance is increasing, they are giving us check only, so it is being deposited in Citibank. So our bank balance increase, asset increase, so we have to debit it. The third effect will be the amount of rupees 7,50,000. So Avon Pharmaceutical owes this money to the business. That means Avon Pharmaceutical becomes a debtor, okay, to the business. Now consultancy fee received being income, rule for nominal account will apply, and this account will be credited. Okay, consultancy fees is kind of revenue only, so we have to credit it. Check received and deposited into Citibank will increase the balance at the bank, right? As I said, asset increases by rupees 2,50,000. Citibank, being a personal account, will be debited. The amount receivable from Avon is an asset, but it's due from Avon at a future date. That means they say that the balance amount Avon will pay after 30 days. That means Avon is becoming a debtor to the business. So to be able to recover it from them, their personal account will have to be created in books of accounts. The Avon Pharmaceutical is a personal account and they are receiver of consultancy. It will be debited. Okay, so the answer. See here. We are going to write the answer. April 25. What happened there? Bank, in our bank, Citibank, what happened? Our balance increased. So, Citibank have to be debited. Right. By 2,50,000, they are paying by check only. Then what happens? The balance amount. He said that it will be paid after 30 days, right? Avon Pharmaceuticals. So they are actually debtor. Debtor is an asset. Asset is increasing here. That means we have to debit them. So Avon Pharmaceuticals. We have to credit a personal account for them. Account debtor to how much? 7,50,000. Okay. Then 2. What happens here? They are actually generating revenue to the business, right? So revenue should be credited. When revenue is increasing, we have to credit it. So 2, consultancy fees. We have to credit this one. Together it will be 10 lakh. Okay, so this is it. Now let's see the last transaction. Last transaction they talk here is they have employed a receptionist on a salary of rupees 5,000 per month and one officer at a salary of rupees 10,000 per month. Okay, so they have employed a receptionist on a salary of rupees 5,000 per month and one officer at a salary of rupees 10,000 per month. Okay, per month they have got a receptionist, they have to pay a receptionist salary of rupees 5,000 and there is one officer and the business has to pay this officer a salary of rupees 10,000. So this is actually expenses only. So expenses are increasing, we have to debit both of them. The salary for the current month is payable to them. That means this month, the current month salary is not pay, it is not been paid yet. Okay, so salary is an expense only, so we have to debit them. But it is also said that the salary for the current month is payable to them. That means it is yet to be paid. Okay, so let's see the transaction. Is this a transaction to be recorded in the books? Remember accrual concept. Accordingly, the expense of salary for the current month must be recognized as the expense for the current month, even if it is not paid for. In fact, the business owes the salary to its employees and this obligation, which is a liability, must be shown in the books. So here we are actually applying an accrual concept. Okay, so that is what they are saying, the summary of this paragraph. The effects will be, first, salary being an item of expense is a nominal account and rule for nominal account will be applied. Okay, as I told you, expense, when expense is increasing, we have to debit them. That's it. So salary account will be debited. Secondly, the obligation to pay salary is towards both employees, right? So current month amount is payable to them. We have not yet paid it, so we are like creditors. We are owing them money. So it's kind of like what, creditors, or you can say it is kind of liability. It is a liability, it is an obligation. Okay, right, so that is what they're saying here. Secondly, the obligation to pay salaries towards both employees. The convention is not to create separate employee accounts, but to use a representative personal account named as salary payable account. Since this is personal account, rule of personal account will apply. Employees being givers of service, it will be credited. Okay, so this is how it is done as per the golden approach. Okay, so what happens here actually? Salary is an expense. When expense is increasing, we have to debit, and they are owing. The current month amount is not yet paid. So what we have to do? We have to create that. Since as per the accrual concept, we have to recognize that, right? So 15,000 have to be. They are saying that 5,000 per month, right? 5,000 plus 10,000 together, 15,000 will be there. So what happens? The businesses are owing money to both of them. So it is kind of liability only. Okay, so what we have to do? When liability increases, we have to credit it. Simple. So let's write the journal. Journal shall be, this is happening at April 13. Happening on April 13. What happens here? Salary being paid. Salary is an expense. Salary payable account. See here, 10,000 plus 5,000, 15,000 debited and 50,000 have to be credited, right? So I think we have written all the transactions. You can see it here, written all the transactions. Now what we have to do? We have to prepare a ledger accounts, right? That is our next aim. Now I've been telling you that with the help of journal, we'll be posting these entries into ledger. So how is that possible? So this is actually should be covered in our basic classes. Okay, so it's been years since I've last wrote a journal and then been posting into ledger. Let's do that. So how can we use, with the help of journal, how are we going to post it to the ledger account? So that is what I'm going to show you now. First, let's analyze each journal entry. You see each accounts here, right? Cash account, Vigas's capital account, Vaibhav's capital account, furniture account, again cash account here. Okay, so for each of them, you have to prepare separate ledger accounts. So let's say how much ledger accounts will be there. Cash account, Vigas's capital account, Vaibhav's capital account, furniture account, cash account we already calculated, so only once. Citibank account, again cash, not to be considered again. Current account, Citibank we considered. Motor car account, Citibank we considered. Loan from HDFC Bank, then Avon Pharmaceuticals account, then consultancy fees account, then salary account and salary payable account. I think it should be 12 ledger, should be 12 accounts shall be prepared. Okay, so this is how we're going to prepare. Let's see. First one here. First transaction is Vikas and Vaibhavi is bringing in capital. Vikas is bringing in 5 lakh, Vaibhavi is bringing in 2,50,000, and they are bringing this capital in the form of cash. That is together, total becomes 7,50,000, right? So we can start with Vikas's capital account. See, so I'm going to take Vikas's capital account, and here, so whatever is the opposite. Let's say Vikas's capital account is a credit. Okay, I'm just telling you a kind of in a code way. So this is how I learned. Okay, in the beginning era, like when I was in 11th grade and all, I learned it this way. So Vikas's capital account is what I'm going to prepare, right? So see the opposite. Opposite becomes, that means he is credit here. Vikas's capital account is being credited here. So I'm looking forward to the debited account. So debited one is cash account. Okay, so I'm taking that cash account. Fine. And see what is the amount which is corresponding to Vigas's capital account. It is 5 lakh. So what I'm going to do is, Vigas's capital account is being credited here, right? It's being credited here, but I'm taking the term of the debited one. So I have already drawn Vigas's capital account. So this is the way we have to do it. So date will be 1/4. I'm not sure about the year. Okay, so what happens here? Vigas's capital account. Vigas's capital account is being credited here. So on the credit side, this is the credit side and this is the debit side. Okay, we have to actually write it here. Credit and it is written here debit. Okay. So Vikas's capital account is being credited here. So I'm going to take the credit side since Vikas's capital account is being credited, and I'm going to write this term, the debited term. Why? Like, because whatever account we are going to prepare, that particular same account's name won't appear in that account. Okay. So remember that. So cash account, right? Buy cash. So whenever we are going to write in this side, we have to write buy. It should start with buy, and whenever you're going to write in the debit side, we have to start with to. Remember that. Okay, so buy cash account. How much should we return here? Whatever amount is corresponding to Vikas's capital account shall be written 5 lakh. So many students does a mistake here. They write this 7,50,000. So it will be wrong. Okay, so we have to write 5 lakh. Okay, then let me see if there is any more transaction with Mr. Vikas's capital. Is there any journal entry that deals with Vikas's capital account again? Is there anyone? No. Okay, so that's the only transaction that happens in Vikas's capital account, right? So let's just total both the sides and balance it. So I begin with the April 1st, right? So whenever I'm going to balance, the last entry shall be 33. Like say if it is 2023 here, it should be 2024. That's the financial year. So financial year and have to write 2 what balance carry down, but I'm not sure about the amount. So for that I have to total both the sides. When I total it, there is only 5 lakh. Both side it will be 5 lakh since there is no amount in debit side. So what will be the balancing amount here? That means the balance figure. What is the balance figure here when I set this off? 5 lakh only. Okay, so this 5 lakh will be carried down. Likewise, we are going to prepare Vaibhavi's capital account. See, Vaibhavi's capital account is also credited here, right? So what is the debited term here? Cash. Vaibhavi's capital account is being credited here. So I'm going to write this transaction in the credit side only. And the corresponding amount is 2,50,000. So let's see. Vaibhavi's capital account. Again, 1, 4. Buy cash account. How much is the amount corresponding to Vaibhavi's capital account in the journal entry? 2,50,000. 2,50,000, right? And is there any more transaction that involves Vaibhavi's capital account? You can see anything? No. So we are going to balance it. We are going to total it together. So when I totaled it, there is no entries in debit side. So 2,50,000 is the total amount. 2,50,000 have to be written here also. And the balancing amount, balance figure will be to balance carried down. The balance figure will be 2,50,000 itself. 2,50,000. That's it. So this is all about Vaibhavi's capital account. We also did Vaibhavi's capital account. Now we are going to see. So we completed with this one and this one. Now we are going to see cash account. Okay, now let's prepare cash account. So when you see cash, there is lots of transaction with cash. So you have to consider that also. Okay, so first one, the very first transaction is bringing in capital as cash, right? So cash has been debited. So as I told you, I'm going to look forward for the opposite terms. That means cash has been debited here. So I'm going to look to the credit terms. Creditor terms is Vikas's capital account and Vaibhavi's capital account, the first transaction, right? And cash account is being debited here. So whatever I'm going to write, I will be writing it in debit side. And what amount will I write? The corresponding amount of cash account is 7,50,000, right? So what I'm going to do? There is two, this include what? 3 set, right? Cash account debit, 2 Vikas's 2 credits are being involved here. So we are going to write the amount as it. Like, as I told you, we are preparing cash account, fine. And I'm beginning with what? 1/4, whatever it is. This is debit side, okay? This is debit side. So first thing we have to write 2. Whatever we are going to write in debit side, we have to begin with 2 only. So 2. What happens? Cash is debited here. So the opposite terms are Vikas's capital account, Vaibhavi's capital account. So 2 Vikas's capital account and also 1/4 2 Vaibhavi's capital account. How much? That is 5 lakh and 2,50,000. Since these two together become 7,50,000, it is fine. Okay. So we wrote the first transaction here. So first one is completed. Now let's see if there is any more cash account involved. Yes, the second transaction. What happens? We are buying furniture with cash of rupees 25,000. So cash here is credited. So we have to write this transaction in the credit side only, in the credit side of the ledger. What term? With what term? What term shall we use? Furniture. Furniture account shall be used, and we have to write the amount which is corresponding to the cash account here. Both the side is 25,000 only, so we can write it. So the date is April 10. So 10 April, whatever year it is, buy furniture. Buy furniture, we have to write buy furniture account. We have to write the amount which is corresponding to the cash account, which is 25,000. See, for any more transactions we have returned. This one, this cash is also over. This one is also over. Cash account, yes. Citibank account debit to cash account. We are depositing rupees 1 lakh into Citibank. So cash has been decreasing. So cash has been credited here. So we have to write it, this one, in the credit side of the ledger account. So we will be using Citibank account. The term Citibank account will be used. This is happening at 11th of April. By Citibank account. Citibank account, how much? 1 lakh. Okay, fine. Then, so this is also over. Then, is there any more cash involved? Is there any more cash involved? No. So this is all about cash account. Okay, now what we are going to do is, we are going to total both the side. So when I total both the side, I understood that 7,50,000 was greater. This side is more. So what I'm going to do, I just totaled here. I'm going to write the same total here also. 7,50,000. Now subtract these amounts from this amount and we'll get a balancing figure in this side. By balance carry down will be in this side in this case. We have to write 34, whatever year it is. Okay, so 7,50,000 minus 1 lakh. 1 lakh minus 25,000. It is 6,25,000, right? 6,25,000 is the balancing figure. We are going to carry it down. So we are over with cash account. Next we are going to deal with furniture account. The next one that appears here is, we already prepared this one is completed. Now we're going to do is furniture account. So now let's do furniture account. So furniture account, is there only one furniture? There is only one. There is any more transaction that involves furniture here? No. So what happens here in furniture account is being debited. So we have to write in the debit side of the ledger account only. We have to use the term cash because we are buying furniture. Okay, so 25,000, the amount which is corresponding to the furniture account is 25,000. We have to write that amount. This is the debit side, credit side. Or you can also remind it like this. Since furniture is an asset, when asset increase, we have to write down on the debit side. When asset decrease, we have to write in the credit side. In this case, furniture is being bought in by giving cash. So this is a furniture account. So all we have to focus is on furniture only. So furniture has been increased, so we have to write down whatever. Like when asset is increased, we have to write it in the debit side. That's it. So what I'm going to do is, the date is 10th of April. What happened here? To cash. Since that is the opposite term which we used there, right? To cash. So when we are conceptually learning, we have to say that we are giving cash in order to buy a furniture, right? So that's why we are using this term here. Fine. So amount is 25,000, I think. So right, that's 25,000. Yes, there is nothing else. We can total it since there is no entries in the credit side. Write the same total here, 25,000, 25,000. Here 13,4 particular year. By balance carry down, I have to write same amount, 25,000. There is no entries in credit side, right? So this will be the balancing figure. So we are over with furniture account also. So now we are over with furniture account. Next comes this Citibank account. Let's do that, Citibank account. So Citibank, I think in our study mat it is Bank of Baroda something. So it is that name which I have written here. So Citibank, what happens? Citibank has been debited, so I have to write in the debit side. And I have to use the term cash, and I also have to write the amount which is corresponding to Citibank, which is 1 lakh. Right. So let's do that. The date is April 11. 11th of April. To cash account 1 lakh. Okay. Then is there any more place where we are using Citibank? Yes, here. On April 15th. What happens? Citibank is been credited here. So we have to write in the credit side. What term you have to use? Rent. We are paying rent, right? So the date is 15th of April. By rent account. Remember to write by at 2, okay? It is very important. account 15,000, right? So this one is also over. Is there any more Citibank? Yes, here we are crediting Citibank, so we have to use the term motor car. So let's see, crediting only, right? So April 20 by motor car account. What happens here? 50,000, we are giving down payment 50,000. Okay, so we wrote the particular amount corresponding to bank only we have to write. So that is 50,000 here. Okay, so that amount we wrote it. Don't write what? Don't write 4,50,000. It's then, is there any more Citibank account? Yes, here we are debiting Citibank account, and what we have to do, we have to use consultancy fees. We have to write in the debit side only, but use the term consultancy fees. That is on April 25th to consultancy, that is a revenue, right? Consultancy fees account. What is the amount which is corresponding to Citibank? 2,50,000. Okay, 2,50,000 have to be written. 2,50,000. Is there any more place where we use Citibank? Is there any more? No. So Citibank is also over. Now let's total both the sides. We get to see that debit side is more, right, when we total. So we are going to write the total here. It becomes 3,50,000. Write the totals here. 3,50,000. So the balancing figure appears here only. By balance carry down on 13 April. What is the balancing amount? 3,50,000 minus 50,000 and 15,000. 50,000 and 15,000. The balancing figure will be 2,85,000. Okay, fine. So who comes next? So Citibank is also over. First 3 transactions are over. Next one is rent account. Now let's write rent account. In rent account, what happens? Rent account is being debited here, so we have to write in rent accounts. Debit side only we have to write. We have to use the term Citibank, right? Citibank, and we have to write the amount which is corresponding to the rent account, 15,000. So the date that this happens is, I think it is on 15th of April, right? 15th of April. 15/4. Rent account is being debited to Citibank account. The amount is 15,000. There is no other transactions. Let's total both the sides. And balancing figure will appear here. By balance carry down. So this one is the balancing figure, 15,000. Okay. So next. Rent account is also over. Now we have to draw motor car account. In motor car account, what happens? We are debiting motor car. So we have to use the term Citibank also we have to use. Loan from HDFC Bank also we have to use. Right. So both these terms have to be used on the debit side, and we have to write the amount 4,50,000 only becomes, like, when we add these together it becomes 4,50,000 actually. So there is no problem. So the date that this happens is April 20 this happens. Okay, so to what are the bank names? To Citibank account we are paying by check, right? I think so. That is 15,000 down payment, and also on the same date 20/4, that same date, to loan from HDFC Bank. Loan from HDFC Bank. Here it will be 4 lakh. Is there any more place we are using motor car? Is there any more place we are using motor car? No, that's the only one. So what we have to do, we have to total it. There is no entries in the credit side, so 4,50,000 it is. Write the same total here, 13/4 by balance carry down. This one is the balancing figure, becomes 4,50,000. Okay, so everyone try to do this question just because just refresh your mind. These are the very basics you have to have when you are learning financial accounting. And next one is loan from HDFC bank account. So now we are over with motor car. Next one is loan from HDFC bank account. So here it is being credited, right? So we have to write the term motor car in the credit side, and we have to write the corresponding amount, which is 4 lakh. This happens in 24 by motor car account. The amount which is corresponding to loan from HDFC bank account is 4 lakh. Write that amount here. There is no other transaction that involves this account. So total it 4 lakh here. Balancing figure 13,4. Carry down. It is 4 lakh. Okay, then comes who? We are over with this one also. Next comes Avon Pharmaceuticals. Consultancy fee 4 also. 4 more is pending. Avon Pharmaceuticals. Avon Pharmaceuticals is being debited here. We have to use opposite term consultancy fees, and we have to write the corresponding amount 7,50,000. So this happens at April 25. So 25 for to consultancy fees 7,50,000. There is no other amount in the credit side, just total it 7,50,000. 13,4 by balance carry down 7,50,000 only. Okay, then consultancy fees is being credited here. We have to in the credit side we have to use both these terms. 25th, what happens, it is by Citibank account, it will be 12,50,000. And also on the same date by Avon Pharmaceuticals. That name is changed in there is a name change in our study mat. Okay, so write that a name only. 7,50,000. You can check our study mat. The answer is wrong and see this answer is right. So there is no amount here. Let's total it 10 lakh. 10 lakh here. 13,4 to balance carry down 10 lakh. Okay, so there is 2 more accounts to be drawn, so I'm just giving that as a homework. Okay, now the only 2 one is this one, salary account and salary payable account. So what happens in salary account? Salary account has been debited here, right? So we have to write in the debit side of the salary account, we have to use the term salary payable and write the corresponding amount of salary account, which is 15,000. That's all. That is the only transaction that is involving salary. And salary payable also the same way. Here salary payable is being credited, so in the credit side of salary payable account we have to use the term salary account and write the corresponding amount of salary payable, which is also 15,000. That's all. Okay, so this is all about this question. I think illustration number 1 is clear to you. Actually this question is very easy only, and I know many of you might not do this, but it is okay to just refresh your mind. These are the things which we should have in our further classes. Okay, these are the very basics which we should have, so remember this. Okay, so it's been years since I've last done this, so that's why I thought to do this question for you. Thank you. That's all for this section. Okay, so this chapter is over. Thank you.